Welcome, G3 investors. This is Greg Gallagher, and this is the final report for the year ended December 31st, 2020. Can't hardly say it right. Well, I've been under the weather for the last couple of weeks with a pretty serious case of bronchitis. Don't know what happened, but man, worst one I've had in quite some time. All right, so let's look at the trading. So I'm a little hoarse. Sorry about that. Still, I just got my voice back about 3 days ago. Okay, so we have Model 2 results for the year. We started our initial capital at 100,000, and we made 121%. So that brings our final portfolio value to 221,280 bucks. That's 121% gain for the model as compared to the S&P, which just went up 16.3%. And really, given the year that we've had, that's an amazing return for the S&P. And of course, the Nasdaq is where all the action's been this year, and it had a 43.6% return there. But still, we beat that by 77%. So if you're interested in learning how I trade, the setups I always see, I make comments and updates on the market throughout the day, the trades that I do and when I do them, all for the grand total of 20 bucks a month. Become a G3 patron. Copy this into your browser and sign up. All right, now I'm going to spend a little bit more time this year kind of going over things. So let's look at what I like to refer to as the summary. This is our trading statistics, if you will. Our year-to-date counts, we did 634 trades, making our 121,000. 407 winning trades, 64%. That's not bad. It's pretty good batting average there. We have small losers, 227 of them, 35%. And, that cost us 26% of the gross value. But we had big gainers that more than it offset that, 51 of those. I consider big gainer as any gain that annualized is more than 10%. Again, everything was based on a $100,000 initial investment on January 2nd in 2020. The winners to losers ratio was 2.7 to 1. We always try to get around 2.5 to 3 to 1 or better. Obviously, we want better. That's just more stuff down here, but at any rate, okay. Right now, the model has 10 open positions. We've got unrealized gains of $826. So that means that of that 121,000 in gains, 120,000 of it is realized gains. And we track all of our gains and losses that we do here. So here's the last month of gains. So we did 51 trades in the last month, made 3,000 bucks on completed trades, that is. Whoops, sorry. Now I want to look at, let's see, gains by month. Okay, this is just another way of looking at the gains. Here's the gains, the percentage gain based on the 100,000, and there it is by month. So you can see we started out slow. We had a great month in March. That was the biggest gain in the history of G3 investors since I think it goes back to 2017. It was a nice gain, and it just seemed like we ran around 8 to 10% on average. But then along came November, and we got a 20% gain. Even in December, I mean, usually don't do that good, but a 4.1% gain in December is pretty doggone good, in my opinion. Okay. Let's look at, here's a schedule that kind of looks at the gains by ETF. We trade, there's about 25 ETFs here that we trade, 3 short side, and then we trade, basically we trade the what do you call them, loss of words here. We trade the indexes that the various sectors of the S&P 500 index, plus we pick up semiconductors and gold miners. We also look at biotechnology, and then of course we trade not only the Nasdaq and the SPY, one of our main trading vehicles, but we also trade the Russell 1000, and then the mid caps, small caps, transports, defense, and gold, silver, and natural gas. Natural gas is we have a position in that right now. That's usually a winter only trade. Sometimes we get some trades on it, but you can see here the gains that we've had by ETF. And the amazing thing is we've actually gained more from our short positions this year than we have our long positions, and you'll see why when we look at the market here next. Okay. Now, I've been saying this is we're in a mega trend, if you will. This is a megaphone or a megaphone type trend, and this is the Nasdaq Composite Index, and you're seeing back here in 2000 and right here, this megaphone formed right here, and on 3/16/2018, okay, and it made a higher high, another higher high, and then higher low. Didn't make another higher low, but now it's far exceeded this trend. So we're up into the stratosphere here. We're in what I refer to as the blow off top phase of the market, if we're going to have one. It sure seems like we're destined to have one. And that's the Nasdaq. If we look at the SPX, which is this S&P 500 index, it's also in a mega trend, but it's a smaller one, and we have two touches here on the way down and two touches on the way up, and we just now popped above it a little bit. So this could go on for quite some time. You know, I mean, you don't know where it's going to stop. It could go for another 3 months. It could go for another 3 years, for all I know. We don't predict where the market's going to go. We just trade where the market goes, and we make money in up, down, or sideways markets. Okay, now I'm going to take a look at some all right, I'm going to look at some of the ETFs that are really strong. We don't have a position in SMH, but that is the semiconductor ETF, and you know that one's been up about 50%, 54% this year, and we made about 28% on our investment of it, so we didn't do bad on that one. Financials is we have an open position there, so that's XLF. Hit enter. Yeah, okay, so I'm just having you look at this. Is a 3-month chart here, and so we're getting to see it. If we were to look at a year-to-date on it, you can see here's the big correction. Virtually every ETF that we follow looks like this, although financials hasn't broken above. It's all high back here, so we're still, well, I consider it's a good trade right now, and we got a position in it. You know, it's trying to make up some. You know, if we looked at SMH, I think I'll just use this look for people mostly, but I want to go back to XLF. Okay, there's the year-to-date look. That's for the whole year, the entire year. There's 3 months, and then there's 5 days, and you can see why we took a position in it as it broke out here, and it's went pretty much straight up since that. So that's where the, you know, right now we've got the 10 positions, and we still got $64,000 in cash when Monday rolls around. And that reminds me of what we're going to do in the upcoming year. Since we've doubled the portfolio this year in less than a year, okay, so, well, we made 121%. We're going to just take that portfolio, model number 2, and trade it again and try to double. Our goal is to double it again. So maybe we can take that 220,000 and turn it into 450,000 or 500,000 or something like that, and then the next year we'll double it again. So the goal is to always in trading is to try to compound your invested capital. We're not here to. So I trade most of the time in IRA accounts or several IRA accounts, and I try to double my capital. And it's complicated because you can only short with ETFs. You can only go long. You can't trade again and again the same account. So it's work, but it's worth it. The end result is worth it. All right, let's look at some more of our leaders. XLV is another open position for us. Now that's a consumer discretionary sector. You can see here, correction, off to the races. I really thought when we were down here we were going to go lower and go back and test these lows, but this market has been amazingly strong, especially when you look at the technology, which I'll get to here in a minute. But that's XLV, the healthcare sector. We have an open position in it. XLB, which is the materials sector. This one has been traded sideways since here, consolidating, and it just broke out, so we took a position in that one. If we get back to one of our favorites, the Qs, then that would be the Nasdaq 100 Trust Series. You can see it broke out and had this big correction pattern here. It looked like, again, when I was here, I thought we were headed much lower. Voila, nope, right back up. So we got a position in that one, and we've done very well with the Nasdaq this year. We made 42% on it, and as an ETF by itself, it went up 47.6%. So we've done very well with that one. SPY, we must not forget the S&P 500 again. So same pattern, same trading. Now, not all ETFs are created equal. The other one, give an example, we've done pretty good with IWF. That's another one we made 28% on. I like trading it because it seems like the Russell 2000 was a slower vehicle in the past, but this year the Russell IWM, okay, which I have not traded this year, went into this little hyperbolic move here, just like and basically the Russell has led from this gap up right here. It's been the leading one. I think that's about a 22% gain there until we had this 3-day correction, and it doesn't look like it is doing anything but forming a flag. So it looks like it's poised to go higher, as I do think the market is poised to go higher. But again, the market doesn't care what I think. Mr. Market decides where it goes. Where it goes, nobody really knows, so we just follow the market wherever it goes. I promised I'd look at some losers. So XLE, this is the energy sector. This is the big oil and gas companies, Exxon Mobil, Chevron, and they have not done too well here. This has been they did pop out here, and we got a little trade earlier on and made some money on it. It's not like we haven't made money in them. We have, but because we make money when they go down, they go up and sideways. I wanted to see the transports. Well, yeah, ITA, not the transports, the defense, aerospace and defense, or as I like to call it, Boeing. You can see here's another weak ETF that hasn't gone very, very far or very much of anywhere. And then, of course, the other weaknesses have been in the metals and even the gold miners. It's been in kind of a downward trend here. And if we look at gold or silver, Whoa, GLO. That's Global Opportunities Fund. Sorry. GLD. Again, a downtrend right here. We just took a position in it because we just popped above the 100-day simple moving average there, and I think we got a position in silver as well. So there is some fear in the market out there. Yeah, silver looks a little bit better than gold, although it trades crazy sometimes. And then again, we just took a position in UNG, which is natural gas, and the only time you want to buy that one is down here at the bottom when it's getting ready to reverse. I'd like to see that one go from, so we're in it at 920, and I'd like to see that one go up to 1750 or something. If we get some cold weather, could easily do that, or it could easily go much higher, and that would be a nice trade. I've had that happen to us in the past. Okay, well, can't say goodbye to 2020 without looking at the heat map. So here's a 1 month performance of the S&P 500, and you can see on the heat map that the big baby. This has been Apple's. It's been the Fang Man, which would be Facebook, Apple. Let's see, Netflix. G would be for Google. Then Microsoft, Amazon, and I always track NVIDIA to track one of the semiconductors, and NVIDIA was a real big mover, although I don't see it on here right now. It looks like Oracle and Abaco, whatever that one is. But you can see that it's, other than you got to throw Disney in there, and of course the wonder stock of the world, Tesla. I don't understand that stock at all. I don't trade individual stocks. If I did, I'd probably be in Tesla. PayPal has also had a nice year. And then we had some healthcare stuff, all this COVID and the vaccine and everything. You got all kinds of gains in the biotech. Exxon is making a recovery here, it seems like. Disney and, there's Netflix. It's like I was looking for it over in here somewhere, but that's had a nice gain for it. And that's just for the 1 month, though. If we look at the year-to-date, or a 1 year performance, if you will, now it really becomes evident who's in control of the market. There you got Apple with 76%, Amazon, Google, Facebook, only 30%. Geez, it's hardly worth mentioning. There's Microsoft, 38%. You still got PayPal at 114%, but it's a small cap stock compared to Amazon, Google, Facebook, and them. And Tesla just entered in on, look at that, 720%. I gotta look at that stock a minute just to go back and TSLA. Come on. I must have entered it wrong. Sorry, folks. There you go. There's a hyperbolic stock. And this is probably when the news that it was going to go into the S&P 500, and then that got rebalanced just recently. And so they got it added in somewhere around in here. And off to the races. But, So am I concerned about the market in terms of valuation? Absolutely. So if we look at, you can look at the price earnings ratios, and it's all red. Red is bad. Okay. In case you don't know, if you're not a follower of G3 investors, you might not know what we're talking about here. That's the forward PE. It's just as red and just as bad. But I like it's easy to manipulate. For big corporations, especially, to manipulate their earnings number. I mean, Tesla, I don't think they've ever made a profit in real life. But, you can't manipulate sales. So it's trading at 23 times sales. And to me, anything above 3 or 4 should be red. Certainly anything above 5 And you can see even, this is Apple. I mean, this is not if you look at the PEG ratio, which you get in, which takes into account the price earnings growth, 3.2. Okay, it's red. Is there any green? Not really. Why is that? It's because the market's crazy. I mean, it's just insane. The valuations are insane. That's why we're in the bubblicious phase of this market, in my opinion. Of course, my opinions aren't worth anything to Mr. Market, and I don't trade on my opinions. I trade on what the market does. At any rate, this is Greg Gallagher with G3 Investors, and we're saying sayonara to 2020. Let's put 2020 in the rear view mirror. Well, and I'm very happy to do that. So it's Greg Gallagher, G3 Investors. Good trading, good luck.